In the same way uranium was in 23, gold was in 24, my highest conviction trade for 25 is copper. That is going to make the markets think about stagflation. And we all know what did very well in the last stagflation. Chaos is generally not good for markets.
Hi, and welcome to Wealthion. I'm James Conner. Well, 2024 is coming to an end, and 2025 is coming up pretty quick. And if you want to start the year off on a strong financial footing, consider having a no-obligation discussion with a vetted financial advisor at wealthion.com/free. Once again, that's wealthion.com/free to find out more information. Lobo, thank you very much for joining us today. How are things in Puerto Rico?
Warm and sunny as usual here in Tax Haven. If you're a surfer, it's also maybe heaven.
So many reasons to go there. I am located in Toronto, and right now it's around freezing, so 32 degrees Fahrenheit, 0 Celsius, and we have yet to get any snow, but I don't know if you watch football, but last night the Buffalo Bills, that's only an hour and a half away from Toronto, they were just inundated with lake effect snow. They got a massive dump.
Well, we've got plenty of room here in our floating island of garbage, so you're welcome anytime you want to get away from the Great White North.
I might have to do that soon. So much has happened since the last time we spoke. We last spoke in late August, and at that time you said the U.S. economy was in recession or approaching a recession. Have your views changed since this time?
It's very much the put up or shut up moment for me here. You know, I could argue rolling recession. You know, we had manufacturing recession. Well, still, really. We had a transportation recession. We've had a commodities recession. But, you know, I don't want to weasel my way out of anything. I said undeniable recession by the end of this year, and there's not a lot of this year left, and there's still plenty of deniability left. It's looking like that one's not going to work out for me. Though that said, as we spoke, there were cracks appearing in the labor market, and they have widened. You know, they didn't just go away. In fact, the last labor report we had was disastrous, and everybody sort of shrugged it off. Oh, because the hurricanes did it, or you know, it was just the Boeing strike. There was a lot of telegraphing in advance of that jobs report coming out, so that when we got essentially zero, I mean, 12,000 jobs in an economy the size of the United States is nothing. New jobs, you know, it was amazing to see how the market shrugged that off and just, you know, bought the narrative. So we are now, as we record this, you know, maybe it goes live and it'll be happening. That, you know, the brown stuff will be hitting the fan or not. The next jobs report is due out this Friday. And if it doesn't come screaming back, then they can't just blame it on the weather, right? So we need, it's not just it'll be nice or Wall Street would cheer, but for the narrative to hold together, we need another blowout jobs report to say, oh, it was all just the weather. If we get anything that disappoints forecasts, maybe, you know, the powers that be will still deny it, and I won't get my undeniable recession. I'll still be wrong. But the reality will be weakness along the lines of what I called. So, you know, consolation prize here is actually not, oh, well, I was kind of right. The point is that it was going to be good for the dollar. It was going to be good for gold. It was going to be good for real money, not the funny greenbacks. I can't believe I just said that. That's not a Freudian slip. I don't know what that was. It has been good for the dollar, but I think that's been the Trump effect. We'll see. The weakness in the economy was going to be good for gold. Going into recession is typically good for gold. And we have seen that. And it's striking to me. People are like, well, why isn't it higher? You know, gold bugs always want it to be higher. But, you know, here we are just under 2,700. You know, that's pretty darn good in the face of the higher dollar and the Fed supposedly cutting more rates and, you know, gold doesn't pay interest. You know, typical headwinds for gold to be still anywhere near all-time nominal highs is actually terrific. So I'm not trying to weasel my way out of the answer. It looks like it will be deniable by the end of this year, but the weakness is having the effect that we see. And the other reasons for buying gold, the central banks and all that stuff are still there. So my call was for higher gold, was my highest confidence trade for 2024, and it's worked out pretty good.
And I want to have a deeper discussion on gold, but before we do that, I want to continue on with this theme about the economy. And as you mentioned, the non-farms are coming out this Friday, and I guess that will, depending on those numbers, that will validate or invalidate your thesis. But your concern, if I understand you correctly, is this growing trend we're seeing in unemployment. It bottomed in Q1 of 2023 at 3.5%. The last number we saw was 4.2%, so the trend is definitely up. Do you think it continues as we enter 2025?
Well, I think it was 4.1 and it was flat over the month before, but that was only because of labor force participation rate dropping. So if, other things having been equal, we would have actually seen an increase in unemployment. And the establishment survey versus the household survey. So if you ask establishments, hey, are you full of workers? And they say, yeah. That captures the illegal workers, which I'm not hostile to illegals, as so many are. I'm not a big fan of the big deportation plan. And in my view, the problem is not people that want to come here to work. My view, the problem is giving people, socialist benefits for coming here and not working. But anyway, I don't want to get into the politics of that. My point is that the employment situation is actually worse than the headline numbers make it appear. And I think even on the mainstream, you'll see some admission of this. The number of new jobs that are government jobs, right? The number of new jobs that are part-time jobs. I think the more, the people that aren't trying to make the current administration look good, the more objective observers out there, not just tinfoil hat Lobo, but mainstream types, everybody can see weakening in the labor market. And I think that's one reason why, despite sticky inflation, which we also got, we just got PCE, supposedly the Fed's preferred measure of inflation, going up. And yet the market odds of a rate cut coming up this month also went up. Why would that be if inflation is going the wrong way? Well, it's because I'm right about the weakness in the labor market. And I think everybody can see it, everybody objective. And maybe even the non-objective ones see it, but just don't admit it. So I don't want to say that everything hinges on this one number, but this one number will be very important for validating or invalidating my thesis. Fortunately, my thesis wasn't, sell everything or if I'm wrong about the undeniable recession, I'm not actually going to lose money because, my therefore bet was, gold higher, gold and silver higher. And that has happened this year. So I'm actually okay. Where this could hurt me is that because I'm still in this hard landing camp, I'm not ready to buy into copper or oil or other industrial minerals or energy plays, except uranium, of course. And I may miss the bottom. I may, I'm not trying to time the market. I'm just reluctant to buy when I see a sale price ahead. And that may cause me to end up having to pay more in the future. But you know what? That's better than losing money. And if I have to pay a little bit more, but I'm betting on a long-term bullish trend, then I'm very optimistic. And you haven't asked me about 25 yet. But I'm not worried about missing the bottom. I'd rather do that than bet big now and then have a fire sale price next month, right? I'd be kicking myself. Either way, I think I'd come out ahead.
So you mentioned the Fed. We have one more meeting coming up on December the 13th. We're going to get a decision. What are your thoughts?
I believe it's the 18th. Maybe I'm wrong, but sorry, go ahead. Either way.
What are your thoughts? Do you think they cut?
Well, I'm not a Fed whisperer. It seems like they're telegraphing that they will. The market certainly believes they will. That creates a problem if they don't, right? If the expectations are so lopsided, they upset the apple cart. If it's true, and I'm not saying this is so, but if it's true that this Fed is anti-Trump, then maybe they do upset the apple cart just to, sock Trump on the chin. The election's done. Try to make Trump look bad by upsetting the apple cart here. But maybe not. Biden's still in office. Who knows how that goes. I suspect that if it's true what I'm saying about the U.S. economy being weaker than it looks, this one pillar of American exceptionalism being the strong laborer consumer. Oh, and by the way, it's not just the jobs market that's shown weakening data. The consumer side of things, retail sales, have also shown weakening data. So if this one pillar is in threat, and Powell isn't a complete idiot, he's just a liar, then he knows that. And so, according to mainstream economics, they should be cutting. They're behind the curve. They should have cut more. If you care about the economy going into reverse. Now, the problem, of course, is that inflation has proved stickier than anybody wanted. Our audiences probably expected that, but the mainstream didn't. And cutting rates when inflation still isn't at your target, you can spin the story of, it's on the way. We don't have to actually hit it. It's sustainably on the way there. There'll be bumps along the road. We're recalibrating our policy. All this word soup we get out of the Fed. It doesn't matter. If they're cutting rates while inflation is high and rising, that is going to make the markets think about stagflation. And we all know what did very well in the last stagflation. So it's an interesting setup.
So since Trump came to power, or since he was elected, the U.S. dollar has been very strong. And you probably don't look at the Canadian dollar like I do, but it's at $1.40. So that means anytime I go to the U.S., I'm paying a 40% premium for a cup of coffee or whatever I buy. It's like I can't even afford to go to the U.S. now. But are you surprised by this move that we've seen in the U.S. dollar?
I would say I was surprised. In hindsight, maybe I shouldn't have been. It's not just a knee-jerk reaction. It's assumptions out there. And the idea that Trump's policies are going to strengthen the dollar, the tariffs and things are seen as being pro-dollar. And there is a certain logic to it. If he's successful in forcing international companies to relocate manufacturing to the U.S., they'll need dollars to do that. But his policies are also inflationary. And even if he and Elon are ultimately successful in creating enough growth to have growth reduce the deficits, and despite tax cuts with no spending cuts, there's so many ifs involved in that. It's, I think, highly unlikely. But let's say even if it does happen, it's the sort of thing that takes years to come around. We see this so often. The reformers, they do the hard work of cutting and spending, and Trump isn't planning on cutting my spending besides what he says Elon will do. We'll see. But they do the hard work of reforming the economy. The painful medicine takes a while to percolate through. And then they get voted out because of the painful medicine. And the next guy comes in, some socialist comes in, promising everybody everything. And they get the credit for this improvement in the economy that was engineered by the previous team willing to administer the harsh medicine. We see this so many times. The point being that even if Trump's agenda works and does improve the American economy, I think that takes longer than the dollar traders or the Forex traders are anticipating now. And in the meantime, we see weakness. In the meantime, we see, blowing out deficits. And that really shouldn't be good for the dollar on the Forex market. So I was surprised to see what it seemed like a widespread error like this. But given that that's what they think, a little less surprised now. It kind of makes sense. But I think they're wrong. And if anything, I kind of wish that previous market normalcy had prevailed. I kind of wish that this higher dollar had whacked gold down harder. People were saying, oh, that's it. It's topped. It's going down to 2,500 and then it'll consolidate down there or lower. If that had happened, I would have had so many bargain buying opportunities that just haven't materialized. I'm looking at my portfolio. I don't have a lot of tax losses to harvest this year. It would have been great to take advantage of tax loss season to do some shopping. But gold has held on so well, and the better gold stocks have held on quite well, that there's not a lot of screaming fire sale bargains out there that I would do. Or rather, if there are fire sale prices out there, there's usually something wrong with the company. So, yeah, we will see. What I'm saying is, I don't think the higher dollar lasts. Europe is in so much trouble. I get it, but they already have stronger social safety nets. We'll see. I'm not convinced that this rally we see in the dollar has legs, but I'm very glad that it hasn't, knocked my portfolio down on the way. just a pity I didn't get more shopping opportunities.
A big component of Trump's economic plan is to use tariffs as a negotiation tactic. And he recently announced that he's going to impose a 10% tariff on China and a 25% tariff on Canada and Mexico. What are your views on tariffs, and are they good or bad for the economy?
Well, I'm a free marketeer, so I'd like to see no taxes or tariffs. I understand that when other countries have industrial policy and are subsidizing their industries and dumping and doing all kinds of things, it may seem like, going into a fight with one arm tied behind your back or something. But ultimately, those countries are hurting themselves, I think, distorting their own economies, and things come out in the end. But let's put that aside. In the world that we actually live in, not some free market utopia, there are taxes. And I rather like the idea of reducing the income tax. I mean, it's kind of jaw-dropping that a mainstream candidate at the time even mentioned getting rid of the income tax. And the world has been reminded that, before 100 plus years ago, the U.S. funded itself with tariffs and things like that. There was no income tax. So if I could trade no income tax, well, I'm in Puerto Rico, so I don't pay the federal income tax anyway. But if I was a U.S. taxpayer and I could trade getting rid of the income tax for tariffs, sure. They're much less punitive against success. Like the part of the income tax problem is that it is unfair. Though it's deemed fair to charge people who make more and more, that is punishing success. And I think it's called progressive, but I think it's actually regressive. And it's bad. It's negative. It's a negative incentive. But further, taxing income is, I think, inferior to taxing sales. And people, politicians in our current system, they don't want to tax sales or spending because, we have this consumer-driven economy. It's all about confidence. So you want consumers to spend, borrow all you like. We'll print more. But I don't think that's sound policy. I don't think it's how you achieve real and lasting growth. As my mentor, Doug Casey, always says, that, the prudent things to do is to make money, spend less than you make, save the difference, and that gives you the capital to invest and grow. It may take longer. It may be painful if you make the transition from spending to saving. I get that. But that is the path to sustainable growth and success going forward. So to the degree that tariffs cause importers to pay these prices and those things get passed on to consumer spenders, I actually think that's superior to any kind of income tax. So the problem is that if you don't really reduce the income tax, and we'll see if Trump is successful in reducing taxes as he was last time, we'll see. But if we don't reduce those taxes and we increase these, we increase inefficiency, net, we're all worse off. And of course, there is the fact that the world is not a anarcho-utopia, and the other countries will respond, and their responses don't necessarily need to be limited to tit-for-tat tariffs. There can be much more difficult to compensate responses. Like if China cuts off some of the rare earths, of which it supplies 90%, yeah, they could be replaced in time, but that would take, a lot of time. That's, we're talking mining here, right? It takes years, if not decades, to make discoveries, build the project, get permits and things like that. So even if you put some sort of Operation Warp Speed to develop North American rare earth deposits, we're still talking 3, 4, 5, 10 years to replace China if it could be done. I mean, it's not like the minerals aren't there. China's stranglehold, sorry, I'm a rocks kind of guy, so allow this digression, please. China's so-called stranglehold or control or ownership of the rare earth market, it's none of that. It's not that rare earths are actually rare. It's a misnomer. It's just that China has an abundant and cheap supply, and it has had cheap labor. So it's engineered this dominant position. But it's not that we can't get them anywhere else. It's just that it would cost more to get them anywhere else. But what I'm saying is, it would take a long time to recover if China just cut off the spigots. And okay, that would hurt them too, but it would probably hurt us more on a case like that. So what I'm saying is there's potential here for these tariffs to be highly disruptive in ways beyond simply a balance of taxes and incentives within the US. It does concern me. Chaos is generally not good for markets. It does worry me and if I was a mainstream investor with broad exposure to market darlings today, the potential for upset apple carts, not just from the tariffs, but other things that Trump has proposed, would be a serious concern to me.
So you raise an interesting point about income taxes, and it's a relatively new concept. I think, was it the First World War when they were introduced?
Thereabouts.
So,
the Federal Reserve Act came first, and then I don't remember what year the income taxes were officially put in. There was an amendment. It's amazing. Remember, we had to have an amendment to allow this, and arguably it's still not even legal, right? But, Peter Schiff has all the details for that. Ask my fellow Puerto Rican and he'll have the dates for you.
It's amazing we as citizens will gladly give up 30, 40, or 50% of our income to the government, right? We just assume it now. We don't even think twice about it. And then in Canada, the bad thing about being here is we got such a small population to pay for everything. And so we're continuously being taxed on after-tax dollars. So if your payroll tax is, let's just say 50%, I bet you're giving up ultimately 60%, maybe 70% in the form of other taxes.
Yeah, there's Tax Freedom Day. I think the Tax Foundation calculates that, and it always moves forward in the year, every year. That's the day that you stop working for the government and you get to keep, the rest of your. But then there's also something called Cost of Government Day. And I really haven't looked at this for a while, and I'm sure that it would cause me to lose my breakfast if I looked at it for Canada. But in the US, last I saw, I think Tax Freedom Day was somewhere in late spring, and Cost of Government Day was in the fall. If you really think about all the different ways that you're paying, not just federal income taxes, but sales taxes, local taxes, property taxes, all these taxes, you work so hard during the year, and most of that you're actually handing over to one level of government or another. And our forefathers, had a revolution over a 2% T-tax. Now, of course, it was much more than that. There was quartering of soldiers and other kinds of things going on. But it is striking. And it tells you something about how prosperous society has become, that we can tolerate. Actually, that's maybe a way of framing this in terms of takeaways. Like 2% was intolerable to people living on slender margins. Our margins have grown so fat, the people living on welfare in the United States have a quality of life that kings and queens would have envied back then. Medicines that work, refrigeration, dentists. Can you imagine kissing a medieval princess? What would her mouth taste like? It was, never mind the movies and the Hollywood stuff. So think about that. I'm not a historian, but I have read that the typical situation in the medieval times was that you couldn't tax more than a certain amount. You would take your grain and so on, you'd have your tithe and so on. And if you tax more than that, the farmers wouldn't have the seed to plant for the next year, and they'd starve. So even in that kind of feudal system where the kings had a divine right to rule, you knew as king that you could not tax more than this percentage, or they would rise up because they had no choice. You were literally confronting them with the choice of paying the tax or starving to death. And at that point, it became rational to try to throw off the tax. So our society now has become so fat that we can tolerate these much higher fractions of our income going to the state. It doesn't make it right. And the cost of that, sorry, I don't want to get too political, but the cost of that is not just freedom and these vague philosophical things, but the world we don't have. The things that we don't have, the advancements that we don't have because of this giant stopper of this ever-hungry siphoning beast in Washington or Ottawa or wherever. The opportunity cost, the unseen cost is so huge. There are whole science fiction novels written about how wonderful the future would be. We'd be there now, I think, if not for this cost.
In addition to tariffs, Trump is also in favor of tax cuts and deregulation, all of which will be positive for the markets and for the economy in one way, shape, or form. But this is also inflationary. Do you see a threat of inflation picking up later in 2025?
Well, it's inflationary in that it's initially, at least, it will blow out the deficits, I think. And that's why I said, eventually it'd be great if growth comes, makes it all okay. But the number of governments that have tried to grow their way out of debt problems, that road is littered with corpses as far as the eye can see. And my big concern here for 2025, specifically to your question, is that we could have a trust moment here in the US if Trump's agenda is too much cutting too quickly without any reasonable semblance of revenue to offset this. Let's take deregulation. It's great. I'm all for deregulation. I hate taxes, but if you cut the taxes right away, how long before the deregulation produces the growth to pay for that? Right? In the meantime, you could have the bond vigilantes show up and say thanks, but no thanks. And remember, it's not like we talk about bond vigilantes. It's not like there's an organization, right? And they've gone to sleep. It's just people in the market saying, I'm not buying this bond. Or if you're going to sell me this paper, I need a much bigger discount. This is, I don't believe in the value here. That could happen if things get too extreme. And I say this with regret, because I absolutely would love to see, pedal to the metal, max deregulation as fast as possible. I would love to see Elon and Vivek go to town in Washington with Millet's chainsaw and just hack left and right. But I worry that, or let's put it this way. I'm surprised that Millet in Argentina hasn't been shot for all the pain that he has caused. And I'm delighted that he's actually brought inflation down now, that he might have a chance. I worry that may not work so well in the United States or as quickly. And that even if they're doing the right thing, so hear me, dear audience, I'm not saying Trump is bad for wanting to cut taxes or regulation. I'm saying that could cause disruption that is intolerable in the US and backfires. I hope not, but we'll see. Meanwhile, so what to do? I don't want him to say, oh, more regulation is okay or more taxes are okay. I think, the most sensible thing to do is actually make sure that you have enough gold and silver, real money, real safe haven assets to weather whatever storms happen. Meanwhile, if I'm right that this is going to be inflationary in the near term, other things that do well in inflationary environments, real assets, including real things like, copper and iron and stuff you actually need, aluminum, oil, those are things to be looking at in 2025, I think.
This year, we've heard a lot of commentary about the BRICS nations and how they want to come up with another currency to overtake the US dollar. And Trump really recently made a comment regarding the BRICS nations, and he is threatening 100% tariffs on any country who tries to undermine the US dollar. What are your thoughts on this?
It's political grandstanding. How do you define undermine the US dollar? How do you show that somebody has undermined the US dollar and slapped that 100% tariff on them? Very vague. Arbitrary. I also understand, though, that it wasn't just, there are different headlines here. But the more specific actionable thing is if you implement a BRICS currency as an alternative to dollar, then I'll put this 100% tariff on you. But that's just an idea. And I know that gold bugs, my dear fellow gold bugs have been talking about this BRICS gold-backed currency for a long time. But every time it comes up or there's an opportunity for it to come up at a BRICS meeting, it doesn't. And, the last time there was this big fuss about in South Africa last year, they were going to introduce the gold-backed BRICS. And Russia, ever one to stir the pot, was saying, oh, yeah, this is coming. And the South African host said it wasn't even on the agenda. Never mind a gold-backed BRICS currency. There was no BRICS currency even on the agenda. Lo and behold, nothing happened. So at this point, all the evidence suggests that at most, BRICS currency, whatever it's backed by or not, is just an idea. And if it does happen, it would take years to implement. This isn't the sort of thing you just flip a switch and it works. You're talking multiple governments that don't trust each other, don't even speak the same language, right? Are not all on the same economic page, very different economies. To get them to come together and put this together, it is, even if it's happening now in secret, something that would take years to deploy, perhaps or probably longer than Trump has to be in office. So it's just bluster and grandstanding as far as I'm concerned. That said, he's telling other countries what to do and what not to do and making threats. That could produce backlash. And I'm sure the diehard, MAGA hardcore Trump supporters loved it. Yeah, those anti-dollar people, stick it to them. But it's a dangerous thing in a multipolar world to be, throwing threats like that around. So we'll see what happens. Ultimately, though, if this were to actually happen, I think it would totally backfire. It would be all the more reason for other countries to say, you know what, the U.S. is trying to control us. We need something besides, we need to get out of under the U.S.'s thumb. And the main way the U.S. keeps other countries under its thumb is control of the dollar. We just saw that with kicking Russia out of the weaponization of the dollar, kicking Russia out of the SWIFT system and so on. I actually see this as very good for gold once again, not to harp on that one thing, but these are your questions. And, whatever happens with this, I see it as being pro-gold. And I just hope that it doesn't blow up in the U.S.'s face.
So let's spend some time now on gold. It is up 25% on the year. Not a bad year overall. It's not Bitcoin-like, but it's pretty good. What are your thoughts, and where do you see it going in 2025?
I still see it going higher. But, the higher you go, the harder it is to, A, keep going, but B, to hit, to stay vertical. We've had such an increase. It's up 20, it was up more, but it's up 25% now. It's up 72% as of 2 years ago. That is a huge rally. So to see gold go up another 72% from here over the next couple of years, that's a really tall order. There's also, how whether a certain, say, technical analysis is true or not, if a lot of people believe it and they act on it, it has a self-fulfilling prophecy kind of thing. Like, here's this head and shoulders pattern, and if it hits this, then sell. Well, then everybody who believes that will sell. And then, so if you didn't sell, then, you could lose out on that. So there's a lot of analysis out there from mainstream types that's calling for $3,000 level gold. This could become one of those things where it's a self-fulfilling prophecy that, right now, gold feels so strong, it just wants to go up. But if it gets to that self-fulfilling prophecy level where everybody says, okay, our targets have been hit, it's time to take some profits, you could see gold struggle for a while. But hear what I'm saying. I'm not saying gold's going to tank. I'm not saying gold's going back to $1,000 or anything like that. If it goes up to 3,000 and struggles, if 3,000 becomes the new 2,000, that's a fantastic world for gold miners. You'd have to be an exceptionally incompetent miner or even explorer to fail to deliver for shareholders in a $3,000 gold environment. But, $3,000 from 2,700, it's not that huge a gain. So I see more upside in silver, actually, than gold. I see silver as more dangerous, at least in the near term, because silver is more volatile. And even silver bulls will tell you that silver typically underperforms gold at first and then catches up at the end. So I like both in the year ahead, but I am concerned both about near-term potential for correction. If the dollar continues rallying on Trump's headline-making power, that could put gold under pressure. So I like it. I think it's going higher, but it's not my highest confidence trade for 2025. And being this high already, it's harder for me to see it delivering that much alpha going ahead.
So let's talk about equities now. And you raise a very good point because you made mention of the fact that I think you said something about incompetent management teams, and we know there's a lot of them in the mining sector. And I'm going to look at Newmont. Okay, it's the largest gold producer in the world. And even though gold is up 25% on the year, Newmont is flat on the year. And how do you explain that? How do you explain this underperformance that we're seeing in a lot of names? Some names are doing very well, and Agnico comes to mind, Kinross comes to mind, but names like Newmont and Barrick are both flat or down on the year. How do you explain that? Is it just because of incompetent management?
Well, no. It's the largest gold mine in the world, and generally I don't evaluate individual companies and stocks for free. That's what my clients pay me for. But as an example in this space of why are the gold stocks underperforming? By the way, there's a free report on my website called "Are Gold Stocks or a Broken Asset" or something like that. You can search for it; it's there. But I've addressed this question, and the longer term answer, the bigger picture here is, this is something that you probably talked to Rick Rule about or some others, is that the gold producers have actually underperformed in over the years. And in the last cycle, they made ridiculous purchases. They pursued a sort of growth at any price kind of agenda and not profitability. I've actually charted this. This is a Rick Rule thing, but I've charted it over the last big bull run, from 2,500 to 1911 gold. The top gold producers managed to increase their negative free cash flow, like turn a 7-fold increase in gold, in the gold dollar exchange rate, into more negative cash flow. It's spectacular. So there is, I think, maybe a stigma. The kind of big mainstream investors out there remember the underperformance of the producers. I think they are doing better now. And, despite this last quarter having some weak numbers, we have seen improving numbers over the year. And, at some point, if gold does go to 3,000 and Newmont just manages not to fall on its face, its margins will improve. But here's the thing. It is dangerous to look at something like the GDX, which is this basket, and say, oh, gold stocks are underperforming. I mean, this is a basket. And you think about it, we think about, well, the average is this bell curve, right? With this nice bump in the middle. That's the average of what everybody's doing. But if your basket includes a bunch of underperformers and a bunch of overperformers, then that average number doesn't actually, you have sort of a bimodal distribution. You got one bump over here on the underperformers and one bump over here on the overperformers. You average that together, and it looks like the average is an underperformer. But that's not the reality in the marketplace. The reality is a bunch of underperformers and a bunch of people that are delivering the kind of leverage that we, is our reason for even bothering with gold stocks. Like, why do we bother with these crappy choo-choo train industry stocks, like Doug Casey likes to say? Well, because they give us leverage to the underlying commodity. And the fact is that if you're a stock picker and you don't just go with the index and you know what you're doing, you are beating the index, or you are out getting some leverage to the gold price. And I don't want to name names or give out free stock picks, but I think almost anybody can look at the names that are known for operational excellence and are delivering higher margins versus simple size.
So let's move on now and discuss nuclear energy and uranium. You've been very bullish on uranium in the past, and it's down on the year, which I find quite surprising, because I don't think there's another sector that has a more bullish or more positive backdrop than nuclear energy and, by extension, uranium. But what are your thoughts on uranium here? It's down, what is it, down 10 or 15% on the year?
Well, first, I don't want to dislocate my shoulder patting myself on the back, but it's not surprising to me at all. This last time we talked, it was in August, but if we talked before that, around this time in 2023, I was saying, my highest conviction trade for 23 was uranium, and that doubled in that year, so that worked out well. But my highest conviction trade for 2024, despite all that you say being true about the fundamentals for uranium, was not uranium, it was gold. That's worked out well for me this year too. But the reason for that was the answer to your question. Uranium shot way up, way over the incentive price needed for high prices to start to cure high prices. And it's normal when a market goes vertical like that. I mean, gold's up 25% this year, but uranium doubled last year, more than, and up over $100 an ounce when the incentive price was maybe 70, $80. And the long-term contract price was still way, it was like maybe 50 or 60 at the time. It took time for the long-term contract price to catch up. It was, I think, perfectly reasonable to expect some kind of pullback. And I got a lot of hate for saying that, but I was right. I'm sure glad I shifted my focus from uranium to gold in 24. And it's playing out now. I mean, I remember in 22, people were wailing and pulling out their hair because uranium hadn't done anything all year. I kind of feel the same way now, that people are maybe not quite so anguished because it, plus or minus $80 a pound, it's hard to be too despairing about uranium. But it hasn't done anything all year. Well, you know what? Mr. Market doesn't care what you want or it will move when it moves. To my mind, the correction was completely to be expected. It's very telling to me that uranium corrected basically down to where the long-term contract price had risen to, and that has provided a floor under spot. That's perfectly normal. Spot often runs away ahead, but then they converge over time. And I think that's encouraging. I don't actually see a lot of downside from here. High prices are incenting mothballed mines to be brought online, new low-cost projects to be brought online. So all that's working. And it's natural for the market to be concerned. Oh, well, high prices cure high prices. Let's see what happens. But on the ground, the reality is that these restarts and these mine builds, they're almost all of them are behind schedule, or they're slower, or they're not as much. Even Kazatomprom, which again, I'm not recommending one company or anything. This is important because it is both the world's largest and lowest cost uranium producer. That makes it the supplier of marginal pounds to the market. And it has just petitioned to its own government to cut its permits so that it doesn't keep missing its permitted usage. Like, it keeps failing to deliver as much uranium as it's supposed to. I think that's really telling for the largest and lowest cost producer to cut its guidance in that way. So I'm extremely bullish, but I understand why the market says, oh, well, we have new production coming online. There could be a surplus. I think they're wrong. I think it's taking longer. And even if all those mines do come online, our own in-house math, we have another free report on the uranium market if anyone's interested, says that this new supply won't be enough. So I'm very bullish. That said, is uranium going to double in 2025? That seems unlikely. We're already above the incentive price, or the incentive price at least. So I think it goes higher. I think it keeps going higher. I think long-term contract prices will continue going higher, and it'll drag spot higher in time. But I'm not looking for a hockey stick upside here. So I like uranium. I'm actively seeking to add more uranium in my portfolio, but I see more upside elsewhere in 2025 specifically.
And so let's just continue the conversation with Kazatomprom. As a reminder to our viewers, they are responsible for 24 to 25% of the world's production. So whatever happens there is very important to the overall market. They recently came out with their sales numbers, and they said their sales to China increased 58% year over year. So 47% of their total sales now are going to China, while sales to the U.S. are down 19% and now represent only 8.7% of total sales. And this is one of the things that really confounds me about the uranium price and what's happening with U.S. utilities. They're the world's largest consumer. They need 50 million pounds a year to keep those reactors going. But it doesn't seem like they're too concerned about what's happening in the world. What are your thoughts on that?
Well, okay, so my thoughts are that the utilities are run by spreadsheet guys, and they will buy at whatever price they have to when their spreadsheet says, we need this much inventory and we don't have that much or whatever. As long as that's not the case, they'll play games like anybody, try to get the lowest price. So I can't blame them for holding off on buying if they can and waiting and trying to get better prices. But if they're in that group that I was just talking about that thinks that high prices are currently in the process of curing high prices, I think they're making a mistake. So it's an understandable mistake. You see all kinds of new mines coming online. There are new mines in the U.S., by the way, So if Kazatomprom cuts back or sells it all to China, there's more supply coming online in the U.S. And up there in Canada, that Cameco is also ramping up 2 major mines to, the max that they can, pedal to the metal. We'll see how that goes. So I don't think the utilities are worried that they're not going to be able to get uranium from Kazatomprom. I think that writing's been on the wall for a while. And if all their uranium goes to China, well, then the utilities just get more uranium from down under or the Great White North or, wherever they need to. It's a globally fungible market. Uranium is valuable enough a commodity that, unlike coal or unliquefied natural gas, you can send it anywhere, wherever the customer is. So, this division of East-West on the supply lines, it can cause short-term disruptions that are inconvenient, but long-term, I don't really see it as a price driver. Unless we get, a real hard iron curtain between East and West, and we completely lose access to all of those pounds, and the West undersupplies, then that becomes relevant. But I don't think that's likely, and it's certainly not where we're at now. So I'm really keeping my eye on the fundamentals of supply and demand, and therefore, the lateness of these restarts. And we have a number of the U.S. plays saying, well, you know what, that guidance, we're moving it forward in time, or we're cutting it for this year. Mine building is hard. And just because you've mined it before and you're restarting it now doesn't guarantee that it'll be easy. I mean, even Kazatomprom has problems with that, let alone these juniors trying to do it. Even highly beloved past successes in Africa are having trouble ramping up. And I'm not naming names, just saying, this ain't easy. So to my mind, I'm not worried about all this noise about, the bans and all this stuff. And the enriched uranium is a whole nother product. I'm looking at the mine supply, and I'm thinking the market is too optimistic right now about that supply, and that makes me bullish. Now, that doesn't mean that it has to pull a hockey stick. Again, this isn't going to double next year, unlikely in my view. But I see it as having very limited downside and significant upside, and I want it in my portfolio.
Well, Lobo, that was a great discussion, and I want to thank you very much for spending time with us today. I look forward to our next discussion in a few months, and we'll see how you did on your forecasting. But you made mention of a couple of free reports, and you can find them on your website. Maybe tell us about your website, and also if somebody wants to follow you online, where can they go?
Okay, well, quickly before people go away, when you say that, you didn't ask me what my highest conviction trade for 2025 was, and this does relate to your question. And that is actually copper. I see higher potential for alpha in the copper space. And, if for the reasons we talked about, if Trump's agenda is inflationary, I think this is good for copper. But as much as I like gold and silver, are they likely to go up 50% or 100% from here? Or uranium, that's a tougher order. Whereas for copper to go up 50% from here would be easy in a supply crunch. And unlike oil, there's no voluntary supply restraint. And by the way, unlike uranium, there's no voluntary supply restraint in the copper space. So for what it's worth to your audience, if you hung on to this last point of the interview, copper is my in the same way uranium was in 23, gold was in 24, my highest conviction trade for 25 is copper. And to your question, Jim, I have a free report on copper on the website. There is a free report section. If you go to the member area or any of our content pages, there's a free report section, and you can find our latest copper report, an updated uranium report. Needs updating again, but it's still relevant. Other things like that. Finally, just if you subscribe for our free weekly newsletter, you can see more about how I think, decide whether or not I could be your due diligence guy. But the one thing I do promise is that we won't spam you with a flood of daily advertisements. I hate that. You get one email per week, and see if you like the way I think.
Well, that was very good. And thank you for throwing out your highest conviction trade for 2025. The next time we speak, we're going to have a deeper conversation on copper and get your thoughts on it. Once again, thank you.
Thank you.
Well, I hope you enjoyed that discussion with Lobo Tiggre on commodities and the economy. As Lobo mentioned, he's very bullish on the gold price. And if you would like to learn more about gold and how it can benefit your portfolio during these uncertain times, visit our sister company, hardassets.alliance.com. Hard Assets Alliance is a trusted platform that's being used by over 100,000 institutional and retail investors to buy and sell gold bullion and gold coins. Once again, that's hardassets.alliance.com. There's a link below in the show notes. Thank you for being with us today. And if you want to see more content on Wealthion, check out this video next.